I got a couple of slides here for the market update. Right now, what we're looking at is December's numbers. So this is last month. We're only 9 days into this month, so I'll tell you a little about those numbers later. But if you look at those numbers for December, every single housing class is up in average price. So we've got total residential, the average price is $570,000. That's up 10% over the year before, the December of the year before. Detached, we're at $697. Semi-detached, $627. And the two on the bottom are the ones that I really want you to focus on. Row housing, which are townhouses and apartment pricing. We've been talking about this all year long about how apartments and condos have really increased in price from the years before. And you can see that townhouses have a 20% increase over December of 2022, and condos have a 19% increase. That's huge in prices. So all those people who are investing in condos in 2020, 2021, 2022, you can see the price increases that are finally starting to happen.
Yeah, this is awesome. And you know what? This is going to continue. Everyone's here on this call wanting to know, where is the Calgary market going? We can tell you that they're building one house for every 8 people moving here, okay? So there is no way in the world that we can catch up with inventory. Tim's gonna get to inventory soon, but we just wanna talk about this price point. Now, a townhouse is the next best thing for a family moving here if they can't afford a house, okay? So the townhouse market is going to continue no matter what. Right now, we're buying beautiful townhouses under $380. They could be, you know, further down south or up north, but then there's newer product out there for that price range. It is still affordable, and what we like about townhouses is that the condo fees are normally lower than apartments, okay? So that helps for cash flow, and the price point, it also helps if you're buying it for an investment. If you are putting 20% down, it's manageable to save up to get into that price range. Now, the condo market, what's going on there is the majority of buildings happening right now, or the developments that are going up, the majority, and we would say, Tim, we would say 90%, are rental purpose built buildings, okay? So there is no way that we could catch up on inventory for apartments to sell. Okay, so that alone, and we were worried. We got to tell you, 3 years ago, not even 2.5 years ago, we were worried about Marda Loop. We love Marda Loop. We've bought so many condos in Marda Loop, and we were worried because we heard the number of condos going in there, and they're still going. They're knocking down rows of houses to build these condo buildings, and that's going to continue. But it's not going to soften the market because the majority that's being built right now are rental purpose built. So what's that going to do? It's going to keep driving the condos that do come up for sale. It's going to keep driving those prices upwards no matter what, okay? And the population isn't going to slow down. You have Toronto that's gone through the roof, and people in Toronto, I tell you, they're going to be sick of it soon, especially people that have just got done by the price drops in Toronto. So the price drops there where we think we had it bad in Calgary. I mean, when the world financial meltdown happened in 2010, we dropped by 10%, okay? Tim and I owned a lot of real estate back then. We shouldn't even be worried. I was losing sleep back then. I mean, we owned a lot of assets, right? But the market shifted 10%. So the average was 440, it went down to 400. In Toronto, there's properties out there that people haven't even closed on that have dropped $200,000, $300,000, $400,000. And when those people, I don't know how they're going to close, they might be walking away from it. And if they do close, that market will come back. Okay, we need to stress that as well. Like Toronto, it's Toronto. It will come back. That's where people move to. I was just in Sydney, Australia. I flew back on Sunday, and I was telling Tim, the prices there are ridiculous. Okay, and Toronto is a similar city. I mean, price for price. And what's happening in Sydney are people just coming in paying cash. Okay, and where are they getting this cash? They may be downsizing, so they may be selling their house that they bought for 1.5 million and they sold it for 3 million, and then they downsize and just pay cash for the condo or the townhouse, and they can't slow the market down. So Toronto will come back, but we don't know when it will come back, and people will get tired of these fluctuations and move to a city like Calgary, where now, Tim, it used to be a roller coaster, right? Now we could just see steady growth for some time.
Yeah, that's what we're predicting. And another thing about the prices and the movement from bigger cities like Vancouver and Toronto to here is immigration is not going to slow down. It's predicted that we're going to bring in 500,000 new immigrants this year. That's a massive amount for a small country like ours. Like we only have 40 million, but they need to live somewhere. And a lot of these immigrants going to Toronto or going to Vancouver, they find out how expensive it is. So they'll move to the cheaper centers like Calgary and Edmonton and even Winnipeg. I don't know about Winnipeg, but they may move there. But yeah, so we're going to have this influx of people coming in. And Canada is one of the safest countries in the world. So people will move here just for that. And the jobs will follow. So that housing, it has to be built, but we're not building them as fast. So these purpose-built rental buildings that Azad was talking about, they're going to fill up right away, but it's not going to affect our individual property owners that own one condo or two condos, because there's so many people coming into the city that there's that much rental demand. So it's going to be a positive effect on real estate investors in Calgary for quite some time.
Mm-hmm.
Let me just help this person get in the room here. So we'll move on to the next slide in our market update. I hope you guys, yeah, it looks like it's pretty clear on that screen. The first part of the slide, the inventory, we're looking at the month of December going back all the way to 2011. And we can see how after 2011, the financial meltdown was in 2010, 2009, 2010. Inventory started to fall because a lot of money came out of the economy. So people took their houses off the market. And then we saw it start to rebound again and go up 2013, 14, and 15. And at the beginning of 2015 was when oil crashed. So of course, Calgary's inventory is going to drop again, but it didn't drop for very long. Mm-hmm. It rose again all the way up until 1920 there when the pandemic hit. And then you can see it's been falling ever since. Now, during the pandemic, building stopped in Calgary. Like it was very, very slow. All the cranes disappeared from downtown Calgary, so they weren't putting up high rises. All the smaller buildings that you see going up now, there was a hold on there. So our inventory started to slip, mm-hmm. and supply started to fall, but the demand was still there. And you can see that the inventory is at its lowest point in those 10, 11 years, 12 years there in 2023 in December. Now that type of graph, the way you see it, it's like a sine wave. You can follow that for every month of the year as well. So looking at whether it was December, November, October, September 2023, we're lower than all of the months before in the years before. And then on the right-hand side, we've got inventory sales and sales. The blue lines are inventory. You can see how it's been climbing. I got my stuff in the way here. It was climbing until the pandemic there, or sorry, this is just this year. It was climbing this year until July and August, and then it started to fall. That's when the mortgage increases really, really started to take hold in the market. And people were realizing, if I sell, I've got nowhere to go. I'll sell my price at my house at a certain level. I'll just get rid of my mortgage, but then I got to get a mortgage at a higher interest rate if I go buy something else. So it's reflected in the sales. They did the same drop after the summertime. And now our sales are very, very low. Our inventory is very, very low.
For example, Tim, the inventory, we're looking just before the meeting tonight. We're at 1,728 listings right now, active listings. If you go on Creb, it will say something like 24, 2,300 something. But we take away the pending listings, the listings that are under contract. You actually have 1,700 listings, and out of that 1,700, there's 700 condos. So that's citywide. Yeah. So we are actually, so what does this mean to you guys? We're actually waiting for inventory to come up. We actually have clients that are frustrated right now saying, why aren't you sending us anything? It's because nobody's putting properties on the market. So when a property does come on the market, you have 20 to 30 showings straight off the bat, and then offers come in a few days later, and there could be 12 to 15 offers. So right now you're chasing the market upwards, and that's going to continue, Tim, for some time. We don't see that changing. We don't see this inventory problem fixing anytime soon. The only thing that is going to help us, we know 40% of mortgages are coming due into 2024. So what that means is a lot of people who had fixed mortgages, 3 years or 5 years ago, they're coming due, and then people have to pay the higher interest, higher payment on that, which may force them to think about downsizing, or may force them, as we were saying, to people in the room. We've got clients that have made, in the last year, Tim, from the properties we've bought them, have made over $100,000. So they may consider actually selling, put that money in the bank, and place it. We were just saying, place it somewhere else to some clients, to get a return on it, and then jump back in the market when needed, or we wait for that deal to come up and you're ready to go. So there's going to be some different things happening this year.
Yeah, and with those new prices, if new investors get into the market and they pay those higher prices, the mitigating factor there is the rents are just as high proportionally. So you might be paying, $100,000 more for a single family home than you did 2 years ago, but your rents are 20, 30, 40% higher than they were 2 years ago. So it's a positive effect all the way around. The seller gets his profit. The new investor that comes in can still cash flow because the rents are so high.
Yeah, and just on rents, I was watching the CBC last night. There are no rent controls in Alberta. We have to tell you that. We know our friends in Ontario, parts of Ontario, Manitoba, BC. We know they've been forced to sell because they can't raise their rents. They can't even get the tenants out in some circumstances. And the tenant boards are like, I think there was like thousands and thousands of complaints.
Yeah.
They can't even get to that, right? So people are wedged into a scenario there where that doesn't happen in Alberta. Alberta is actually the most landlord-friendly province there is. And there's lots of other factors to that, which we don't have time to get into. But where do we see rents? Just quickly, while we're on the topic, Tim, rents going. I mean, they've gone through the roof. We were just saying to someone in the room, a year and a half ago, maybe 2 years, a room was rented for $500. Now it's roughly $900 upwards for a room. Okay, you used to get a basement for that, we were saying. So where are rents going to go? I think they've kind of peaked. Coming from, being on vacation in Sydney, Australia, just over Christmas, the tenants are actually bidding the rental amount when they go see the properties in Australia right now. They're allowed to bid on what they'll pay for rent. I don't think it's going to get to that.
But what we'll see tenants double up. Like, whereas a single guy may have gone and rented a 2-bedroom apartment, what we're going to see now is he's going to get a roommate. So people are going to double up to afford those new rental rates. And like Azad said, it's probably peaked. It might have a little bit more to go. But when we start to see interest rates fall a little bit, you're going to see rental rates come down as well, because they generally mirror the mortgage rates. If the rental rates were, say, half of what mortgage rates were, nobody would get into investing because there's no cash flow in it. So you're always going to see that level mirrored a little bit. There will be times when rates are going up fast or coming down fast that one or the other will be ahead of the other one. But generally, you can always work out that your rental rate is going to roughly cover the costs of your mortgage, your insurance, and your taxes. And that's just the way it's been for the 17 years we've been doing this. So that's one thing we'll do. Right now, we're going to go to Danielle DeMarco. She is our mortgage specialist. What she does is she helps you develop a mortgage plan, not just get you a mortgage and then say bye. She works it out how many properties you want to get over what period of time, and then she will put you in the right product so that you can continue to buy more properties over time. Yeah. So Danielle, if you're out there, which I think she is, there she is. I'll turn the volume up here so that everybody can hear it.
Perfect. Let me know if you can hear me.
Yeah, okay? Go ahead, Danielle.
Perfect. Okay. So today I wanted to chat a little bit about timing. So not necessarily timing the market, but timing within your financing plan and your investment plan. So Tim and Azad just touched on this, making sure that you're not just looking at one transaction in front of you, one purchase in front of you, but actually looking at the overall plan. How are we going to accumulate multiple properties? But also, importantly, and something that's come up in the last few weeks, is for anybody that currently owns a property and is looking at purchasing and expanding your portfolio, how are you going to be able to potentially access the equity in the properties that you already own? So when are you going to be refinancing, and are you going to qualify? So I don't know if you guys are aware of this, but when you're purchasing a home, the calculations to qualify for a mortgage are very different than when you're refinancing. So to put it bluntly, it can be a lot harder to refinance something you already own than to purchase another property, which seems silly because in our minds, we're saying, oh, well, you already own the property, we can just access the equity. But if we own, let's say, 3 or 4 properties, even sometimes 2, to go back to that first or second property and pull out that equity, sometimes those debt ratios don't work, whereas to purchase the third property or fourth property might work. So we don't want to be solely focused on what the next purchase is or the next transaction is. We also want to look at, okay, at what point in our investment plan are we going to go back and look at properties 1 and 2 and pull out some of that equity so that we have that equity to use for down payment on additional purchases. So if you are an investor who already owns properties, definitely we need to be looking at this part of your portfolio so that we don't get too far down the road into your investment journey and then we can't go back and access the equity. Also, for people who are just starting their investment journey, we want to be looking at, okay, if we purchase property 1, where do we think values are going to go in the next couple of years? Should we purchase property 2 or should we refinance property 1 first? So again, it's like timing in between your purchases as to when we should be accessing equity, getting that money out so that you can use it to invest in other properties. And so that you're not stuck one day with, hey, I own 5 properties, but now I can't go back and I can't pull out any of the equity. So lots of brokers, especially banks, are really just looking at that one transaction. And if you're going to do investing and build a real estate portfolio, you need to be focused on all aspects of that portfolio, not just the one purchase that might be in front of you. We really have to focus on everything. Other thing to touch on, Tim and Azad mentioned this. Right now, we're obviously in a very competitive market. There is multiple offers on properties, and we don't actually foresee that stopping anytime soon. So for you to be liquid and ready to be purchasing, a refinance and accessing that equity takes roughly 3 weeks. So making sure that we're knowing exactly when we want to be doing it, having it done, having that money in your bank account so that you can write that really, really strong competitive offer, whether that's closing early, maybe it's a higher deposit on the initial contract writing to show that buyer, that seller that you're really serious and your financing is in order and you're going to close. So those things, by having these refinances done, having that equity in the bank and sitting liquid, that can oftentimes help strengthen an offer when you're going into these competing offers to do that next investment. So lots to think about, but bottom line is don't just, again, tunnel vision on that next property. We really want you to be focusing on the whole investment portfolio. When should we be refinancing? When should we be purchasing? And how to put that all together so that you're able to accumulate the most amount of properties possible. So that's kind of my tip for today, and something that has come up recently now that property values have obviously increased quite a bit these last couple of years. People are wanting to access this equity. And again, prior to moving on to that next one, it would be a good idea to be looking at that. So as Tim and Azad always preach, if we can borrow against the bank and use the bank's money and less of our money, why not? So why not release that equity and use that to purchase more properties?
Yeah, that's brilliant, Danielle. Thank you so much. And for anyone out there thinking of getting into investing in real estate, it doesn't matter if you're working with your bank or maybe you have a mortgage broker. To reach out to Danielle, it's free. She'll give you advice. As we said, we've actually been working with Danielle for a very, very long time. She's helped, if not hundreds, she's helped a lot of our clients. And you know what? She'll give you the straight up goods on how to move forward.
Yeah, and with Danielle, with some clients, it's a process. You may have just bought a property or you're thinking of buying a property down the road. Getting the process started with a good mortgage broker, it's always a plus. It doesn't cost you anything. And she could get you pointed in the right direction, whether you've got to rearrange some financing on a different property, whether you got to rearrange some debt. She can get you pointed in the right direction. So when you are ready to pull the trigger on that rental property, she's got you in the right place.
Yeah, and there's different, like we've had different circumstances with all different clients. We were just talking about a client, he owned a Land Rover. He was living up in the Northwest, came to us, one of our seminars, wanted to get into investing in real estate. And we actually had to tell him he had to sell his Land Rover to because the payment was too high on the Land Rover to actually get into real estate investing. So, I mean, we're not telling you to sell your Land Rover, but this guy did, and now he's made over probably $200,000 on just that decision. So we're here to make you money, so is Danielle, and get you the right advice. But your first step in investing in real estate is definitely to reach out to Danielle.
Okay, that's it for our market report.